Good morning, Trade Thirsty. It's Jeanette, and it's a beautiful Saturday morning here in Mobile, Alabama. This webinar is going to last probably about 45 minutes, maybe an hour if there's a bunch of questions. I know my good friend Adam Mesh, he'll stick around till the last question is answered. And are you there, Adam?
Yeah, I'm here.
Hey, buddy. Hey, buddy. How are you?
Hello. Good morning.
Morning. I was just chatting with your team about what shelter in place means, and because that's about to go down here in Alabama, and I'm just trying to make sure I understand what my rules are. And JJ, he laid it down for me. So
I mean, yeah,
anyway,
you're in a good place. We got you got your dogs, your family. I'm telling you, listen, for some people this is going to be, anyone who is affected by it, it's going to be a negative event, but I'm already reading people that were in a really hard lockdown are saying they're actually sad when it ends because it becomes like just different. You get into a new it's like weird when it feels like prison for the first couple of days, but I heard it's going to feel like people are going to miss it when it's over, if that makes
yeah,
sense.
I mean, for me, my son works for a pharmacy. He's 21, and he's got a 4-year-old, and he and the girlfriend and the baby live with my mom. Well, my mom's got lung disease, and the baby's got asthma, and so when I put myself on lockdown about 2 weeks ago, I did the same for them. I brought my son here, and so it has been a little bit of a blessing for me to listen to the children, listen to my 21-year-old and my 16-year-old, laugh and watch movies together, and
For sure.
and people are like, oh, it's like the old times. I'm like, no, the old times sucked. They used to fight. They were ugly to each other. They were throwing things at each other. This is not that. This is really, like a magical time for me. It's something, you never think is going to happen for you in your life. And that's certainly not something you wish, but that's my silver lining. And I hope everybody can find one in it.
Instead of like being on the train yesterday, I was teaching my son how to climb a tree.
See, and I would never have
He
been the
started
same.
to freak out. He's like, "I'm too high. I'm too high." I'm like, "Look down." And
Like,
I'm like, "You're a foot off the ground." He's like, "Oh, oh." I was like, "Damn, I need to be doing more of this stuff."
all right, well, let's get started. I want everybody to if you're here, chime in and tell Adam and I where you're at in the country, or if you're not in the U.S., where you are. We're certainly thinking about everybody out there in the world right now and what we're all dealing with, especially what's going on in the stock market. We've seen just extreme numbers both ways, and a lot of fear. A lot of people have lost a lot of money, and so for us, we're here to share with you the best information that we can find that's valuable right now in the market. And I know that Adam and I have stayed in a lot of contact over this time period, and his trading has been spot on. And so I felt like it would be a good time for him to come in. And I think I mentioned this a couple days ago that we actually had him change his topic to this Phoenix topic because it was more timely to the market that we're experiencing. So Adam, I appreciate you, and I want to make sure everybody can hear us. Can everybody hear us? Uh, Give me a yes in the chat box if you can hear us.
There we go.
There we go. Okay. Nobody said where they were
Nobody,
from. And I was like, oh
not
shit.
a, yeah, nobody was answering where they were from.
I was like, well, Adam, we're just over here talking to ourselves. Well, Adam's in New York, and I'm in Alabama, in Mobile, Alabama, and so we're far apart, but experiencing the same. And that's sort of the common thread these days. Adam, we are 4 after the hour, so I'm gonna go ahead and turn it over to you, and stay safe and go climb some trees later. Whatever the
Yeah.
day brings.
All right. Thank you so much. And hello, everybody. Nice to be here with you on this morning. And my goal is to show you a strategy that you can use to take advantage of this market, because up until the last 2 days, we've been seeing 6% moves every day in the S&P. And for individual traders, it's what we dream about. No one is here guaranteeing profits or ensure freedom from losses. I'm happy to talk about my losing trades as well as my winning trades. If anything, I just want you to walk away from this presentation and be like, wow, that guy's really for real. That's what I like to be. So I'm just going to get into strategy with you right now and try to show you, I just got to wake everybody up. First couple of questions, we had a little bit of slow response, but we have a good crowd here. So as I have the chart here, how many of you are currently trading in this market, your own individual account? Just give me a yes or no. Frank was the last person that answered yes for the last question, so I'll go from Frank on. Okay. Wow, braving the world. It's not an easy market to be individually trading in. A lot of people don't know what they're doing. Okay, Frank, everyone else is. So for Frank, okay.
That is a
Now,
lot of yeses, Adam. That is a lot of
yeah,
yeses. I was not expecting that. I was expecting 50-50.
yeah, no, and
That's crazy.
now the more important question is, are you making money? Well, I don't want to confuse the yeses. So let me ask you this: how are you doing? Good, bad, or okay? Just give me a good, bad, or okay. I want to know how you're doing. Good. Yes, Steve, still premium. That's what I said. Good, both bad, bad, okay, 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 okay. Scott, I'm glad you're doing well. So most people are doing okay. Couple bad, couple good. But you're in there, okay? I grew up in this kind of market. I started trading in the 90s. So I was day trading right after they came out with the small order execution system, SOS, after the 1987 crash. They made it so that individual people can trade. I was trading when there was fractions, not decimals. And then when they moved to decimals, and then they got automated trading, so I moved to options. But I've been doing it for over 20 years, and my favorite markets to trade are like this one. And what I'm going to try to do for those of you that are starting from bad through okay to good, kind of add a little bit of an engine to your rowboat, and just kind of get you thinking a different way. And this is a helpful pregame conversation. And don't worry, these slides, I know we have this Beyond Meat up, but I'm gonna go through everything. But let me just tell you, in this market, we put a trade on the other day, and we bought calls in Starbucks when it was at 55. It was 70 a couple days later. And someone wrote in and was like, I joined your service, and I didn't make that trade because I had it as all my indicators said that this was going lower. And I wrote back a long answer, and I said, you got to throw the indicators out in this kind of market. It's too short term. We're seeing 6% swings a day. Now, I'm not advocating day trading, although there will be times where you could take a profit in one day. But what I am saying is this is more like surfing than anything else. It's riding momentum waves. And when you're doing that, it doesn't matter, right? Think about this. If Beyond Meat, as an example, Beyond Meat in the last month has been as high as 127 and as low as 58. And I think we can all agree that has nothing to do with the fundamentals of Beyond Meat, right? Their sales aren't going up and down like a yo-yo to cause the stock to move billions of dollars in valuation. So when you're looking at Beyond Meat at 75, having come down from 127, you can't look at it and say, oh, you know what? They make a good fake burger. And my friend Julie down the street just bought some of these, so I'm going to go long at 75. No, it makes no sense, right? The fundamentals are inapplicable here. All we care about is the momentum, the short-term momentum of the stock. And you see it. You had airlines going up when we still didn't know if we'd be bailed out. Penn Gaming, which has become like a fad stock because Barstool Sports got involved with it, went from 38 to 3, and then it went back up to 15. It went up by 500%. So those are the moves we're seeing, and that's not based on fundamentals. It's just based on the momentum, the ebb and flow of the market. And what I want to show you is a little trick I use when we're doing these kind of trades that helps to give me an edge. And simply put, what I'm looking for is a divergence. And, I guess, what would be cool? I could just go off script. I don't usually do this, but I got an audience that's participating today, which I respect. So I'm going to go off script. Plus, I have a team here. I roll up with a team, which is cool. So I just want to go off script for a second, catch everyone off guard. Will, can you take control of the screen and just go to yahoofinance.com? Because I'm just going to give everyone Saturday morning, March 28th, bird's eye view of what I'm talking about, because it just happened in the stock Thursday to Friday. Okay. So perfect. Thanks, Will. So first, click on the SPYs. Just click on the SPYs. Right. And now just click on historical data. Okay. That's good. Stop. That's good. Thank you. So if you look at March 26th, here, let me see. I don't know if I'll be able to control this one. So if you look over here, March 25th, SPYs closed at 246. March 26th, they opened at 249. They went to 261. So that's a Dow that's going to be up over 1,000 points. Remember that. March 26th, Dow's up over 1,000 points. Okay. March 27th, it comes back down half of that. All right. Now we'll go up to the top of the screen and bring up Roku, ROKU. Okay. Now look at March 26th for Roku. Remember, that's the day the Dow was up over 1,000 points. Roku, which it closed March 25th over here at 94.85, opened at 93.20, hit a low of 87, and closed at 89.75. It was down over $5 with the Dow up over 1,000 points. All the markets across the board were up. Okay. What other information do I need? What other information do I need? The answer is I don't need any other information. I don't need anything else. All I needed to know was that something was up with the stock. Well, actually, I'm sorry. The one thing I want to make sure of is that there was no news on this stock. Because if there was news that was causing it to be down, then everything I'm saying goes out the window. This has to be a non-news event. This has to just be something that's trading different than the rest of the market. So I'm looking at Roku over here, and I'm like, why is this down 5 points when the whole markets are up? And my answer is I don't care. I'm going to go bearish on Roku. That becomes an easy play for me to identify. So I bought puts in Roku. I did, for those who like to collect premium, I sold calls. I sold a 95-100 call spread. And I was doing this throughout the day. I started to do it because it was going against the market. And that was all I needed to know for the short term. And the next day it opened at 87 and it traded down to 83. And as it started to come up, the market did rebound a little bit. All but one of my trades ended. I kept one diagonal trade on. But that's what we do. It's just this. March 26th, market was up big, Roku was down. We're going to put a bearish play on Roku. No news. Okay? So that was just a present day in my head. Because, and then actually, let me just show you one more that I went bullish on. There's two stocks I've traded really well in the last couple of weeks. This is one of them, Uber. So I'll tell you one more, okay? And if you go down, look at March 18th over here, the low 1371. I actually, just so you know, and like I said, my most important thing is that you think I'm real on an event like this. I went out when Uber was trading at 13 on March 18th, and I did a video live, and I just did it really quick. You could tell, like, I'm like in a hat backwards, haven't shaven, bad lighting, and I just did a video. I'm like, all right. This is when it was in the 14s. I'm like, Uber in the 14s. Now we're being out of control. We got to look for opportunities. And I put a really big play on. And the reason I started to put a big play on this, because at a certain point, what happened is you get tired sellers. And while Uber was at its low, the market actually kept going down. And so this was even a real-time, short-term example. This stopped going down ahead of the market. All of a sudden, it was like, all right, I'm done. Nobody else is selling this stock, just no matter what the market does. And so I started buying Uber in the 14s on March 18th, and the next day it hit 21. And a couple of days later, it was at 28. It had doubled in value, and I still own some of it, But now I'm collecting premium and stuff against it. But this went up 100%. But it all started right here, and I won't be able to show you this real-time chart, but this is another example where Uber stopped going down ahead of the market, and this is 100% return in 4 days. But the next day, you're making 50% on the stock. The options, oh my God, the $2.50 May 15th calls, the 14 calls were trading at $2.50. They went up by over 400% the next day. Those calls were trading for over $10. So those are the kind of opportunities we look for. All right. So that's real time. I don't usually do that. You guys got a treat, a little Saturday morning. I don't usually do Saturday morning webinars either. So we went off script. Now we'll just go back into the presentation for a second, and I'll show you a little bit more how I find those. Okay. Frank said, "Are these stocks on your watch list? Do you scan for them?" I've been doing this for over 20 years. Literally, I get paid by a company just to trade on their platform because I have so many people watching me trade and stuff like that. So I have different lists. I have a stay-at-home list. I have a 5G list. I have a video game list. I have a biotech list, and then I have my main list and my bounce list. And I'm always, so what I do every day, Frank, is I look to the left on my trading screen, and if we're up, I look for what's down, and if we're down, I look for what's up. Okay? And they have to be liquid, Barry. They have to be liquid. And I'll try to answer all these questions too, as many as I can as we go. But so this is the Beyond Meat chart, and this was back in January. And what I'll do by the end of this presentation is I'll make this all come together, and I'll show you the two other charts I added that show me how to trade Beyond Meat. Because even though this looks like a good bottom right here, you wouldn't really know that in real time. Looking back on it now, you see this chart and you're like, oh, this is a good time to buy Beyond Meat, which we did. I'm going to add two other charts in later, and I'm going to show you what made this easy, because Beyond Meat created an opportunity where it went from there to the 120s pretty quickly. And I had a trade on that on January 9th. I bought options for $3.75, and they were worth $50.75 4 days later. And it's the same pattern I look for. Listen, sometimes it works for single-digit percentage, a lot of times double-digit percentage, sometimes triple, then sometimes quadruple percentage. This was over 1,500% Beyond Meat. It identified Tesla, the same thing, a stock that's working against the market. And you saw what Tesla did this year. I made some fun videos on that. Shopify was a stock that I was trading this year. Same reason. But I'm going to show you the missing component for all these charts, which is this. Okay. The most recent trade we made in the service I'm talking about today. So this would be the chart of Starbucks. And then you see these other two? The light blue is the Dow. The purple is the S&P 500. So we trade when the stock breaks up or down from the market. So these are the other two charts I'm going to add in for you to bring this presentation together. Okay. Slack, we traded in the last 2 weeks. Again, Slack, I don't know if any of you watch work. It's a stay-at-home stock. Usage is up. This stock, I literally bought it after they had earnings in the high 16s. It never even printed there, I don't think, during trading hours. Maybe it did. We could look, but I bought it after hours at 16 and change, and this thing went to 29 and change, almost 100% return. Okay. The way I started finding all those stocks, it goes back. I'll take you all the way back into 1999, 2000. because that's where I reached the point where my make or break, where I was going to make the last trade ever. It was the last trade I ever made. I was trading in the market. I had $1 million in buying power, and I only had a $50,000 account because that's what they let you do back then. And my account was almost out, and the head of the firm brought me in. He's like, "What's your plan?" And I sat there and I was like, I realized I didn't have one. And when I had been working with a trainer at my first firm, what he had told me was, you want stocks that are making higher highs and you want to sell stocks that are making lower lows. It's kind of weird if you hear that, right? Buy stocks that are making higher highs, sell stocks that are making lower lows. But that's what momentum trading is. And that actually changed a little bit. That worked for a while, but that actually stopped working throughout the years because of the algorithmic trading. They kind of caught on to that. But you could still identify strength and weakness and strength, and that is what I use. So there's the Spotify chart. You see what it did. All we need to see is the breakout from the market. Shopify. So the Phoenix letter, which I'm talking to you about today, there's two histories. The backstory goes back to when it was created. And then I shut down the successful service. I'll tell you why. And then I brought it back in December of 2018. Same formula, a little bit different. So real quick backstory. Now that you've been listening to me for a little bit, so I'll go quick with this. I was trading at a firm. I was really good. The owner of the firm, Fortune Magazine, came in and said, "We want to see what these day traders are all about." They're like, "Go watch him trade. This guy, Nelson Schwartz, watch me trade. I made $20,000 in a couple minutes." He did all of these articles on me about my success. And that expanded to like me being on television, Tonight Show. I got a lot of exposure. So I kind of fell into this newsletter business, and I started providing education. And then what people really wanted me to do was a pick service. They wanted a subscription. They wanted my trade ideas. So I came out and started doing that in 2009 with my very first newsletter, which was the Phoenix letter. I will. My screen is actually stuck. Sorry, guys. There we go. All right. There we go. So yeah. So at the end of 2008, beginning of 2009, I started the Phoenix letter, and the reason it was named the Phoenix because it's the mythical creature that rises from the ashes. I think, Bud, you can just control it for me because I can't control it anymore. Okay. So the Phoenix rose out of the ashes. Okay. And some of the first trades we made were PNC Bank at 16, which went to 125, right? And that was an 800% return. And then we traded Wells Fargo. And I remember buying Wells Fargo at 8 and saying, well, worst case goes to 0. This was after the financial crisis. And these were the trades the Phoenix letter put on. And it's the same formula I just went over in the beginning. It was literally just things that had stopped going down ahead of market. Wells Fargo would not go below 8. Okay. And then we'll just go through a couple more. BlackRock. And that's just one more thing about those charts. When you look to go through those divergences, one of the things you're going to see is you learn to find some good stocks that way, like maybe some up and comers, things that are in play, like Work Right Now or Zoom. You know, if they make it, we could look back as this was the time that it was the beginning, right? And that's what happens. You see how these stocks emerged. So BlackRock at the time, no one knew what BlackRock would become. JP Morgan just seemed like a regular bank when we were trading it back then. We didn't know it would become like a behemoth. But we got in at 35. at 35 when everyone else was getting out. Okay. And then I'm sorry, I can't control the screen. You get whoever, I don't know.
Okay, I'm going to try and take over the presentation real quick just to see if I can help out. Hold on 1 second. Let me switch it to my computer.
Well, I don't know why we can't just go forward. 1 sec. Will, can you just keep controlling the screen? Sorry. Okay, so this is Salesforce. Starbucks at $10. All right, you know what? I'm going to go live in a second. We'll just go through this really quick. Anyhow, so then Boeing went to 400. The market became overdone. So what we did was I shut down the Phoenix letter because at the end of the day, the market just kept going higher and higher and stocks were getting too expensive for people to trade. And I was like, I really want to focus on options. And it wasn't until later that I had this idea that, whoa, I can use options on the Phoenix letter. So just go to the next slide. Okay. So in December of 2018, which seems so long ago right now, right? We saw the market start to really pull back. There were days where the Dow was down 600 points. And what I want to show you that happened in 2018, and this is really prescient right now, 2018 is when I wanted to bring back the Phoenix letter because I saw incredible opportunities. But this serves a double purpose right now because I'm going to show you some of the biggest name stocks, the moves they made in 2018. And for anyone who's trading, you can compare them to where they went after this most recent move. So NVIDIA went from 250 down to 133. But now that's actually stayed back up. Facebook went from 200 down to 135. So those moves are similar to what we saw in December 2018. And we came back, but I would argue that what's going on right now is a little bit worse. IBM, it was back at 112 the last I looked, but that actually, last time it went to just above 100. This time it went to 98 or lower. So IBM has gotten a little bit weaker since then. Just show a couple more. Square went from the 80s to the 50s. This time it went to the 30s, so it was worse than last time. Apple, this is in January 2019, was at 142. So Apple's much stronger than it was last time if you compare overall versus the market. And I was getting asked to do all these interviews, and you realize I have a saying, when the market goes from CNBC to NBC, from Fox Business to Fox, when everyone's talking about the market, that is the best time to be trading. So I decided in December 2018, I called up JJ, whose voice you just heard at home, and I said, I think we should bring back the Phoenix letter. And within 24 hours, we did it. But the only difference was this time around, the second time around, the first time I was catering to professional traders. I was trading to people with multi-million-dollar accounts that could buy these stocks. And so it was a smaller audience, a more sophisticated audience. They loved the trades. But this time I wanted to do it for smaller accounts. So what I did was I did it a little bit differently. Let me show you what I did. I brought on a team to make sure that I'm constantly educating. I started focusing on options so that people could get involved for a small amount. I'll show you what that means. And then I kept that same formula that allowed me to find all those trades to begin with. And even what I just showed you in the demonstration with Roku, that was kind of off script, and Uber, I showed you those same things about individual stock selection, market momentum, reward. So I'm going to show you how we kind of retooled it for you, the individual, and what that became. In terms of a team, we just have a lot more people right now. And so what I created to go with any option service we have is an options academy. So on Mondays, you could come and get extra training because a lot of people don't know how premium collection works or any of that stuff. So I just like to educate, and we do that on Mondays. For a market read, Christian is someone I've worked with for 15 years, and he's a chartered market technician. It's the highest level of technical training there is. He's who I speak to every day about market reads. And it's kind of funny because just this past week, we were talking, and one of the things we laugh at is how anytime the market's up, you have an expert on saying why the market's up and how this is the greatest market ever. And every time the market's down, they have people on saying why the market's down. So on Thursday, Christian, the market was up over 1,000 points, and Christian's like, according to everything I'm looking at, the bottom will be tested again, based on everything I'm seeing. And me and JJ were like texting him and joking around and saying, well, that's funny because I got guy after guy coming on here saying the new bull market has begun, right? And then the next day, the market was down and everyone was coming on saying the bottoms need to be tested, or maybe the bottoms aren't in, or maybe the bottoms haven't for some stocks, but we're still going lower. And just imagine the value of that perspective. It sounds like such a little conversation, but just think about what that means. On a Thursday, when the market's up huge and all the experts are coming on television saying how the new bull market has begun, but you have your guy that you trust in your ear telling you, no, it hasn't. The bottoms will still be tested. Well, I went out with puts on Thursday night, whereas everyone else was getting sucked back into that long. So it helps to have different perspectives. So Christian's great at what he does. We also have Steve Smith on the team. He's been trading options for over 25 years. He's an expert. He worked with James Cramer at the Street. He was an expert in risk reduction with option strategies. So he's a great person to have on the phone to help with that stuff. He teaches the Options Academy along with Michael Honig, who has 25 years experience. And then it's options. It's actually options itself. So if you look at this is just a slide just to go over the difference because I think it's important. The stock Square, if you want to buy 200 shares of Square, because this is one of the stocks we looked at back in December 2018, 200 shares of Square at $57.15 would cost $11,430. So the old Phoenix letter would have just said buy Square, $57.15. People would have needed $11,000. The new Phoenix letter that we brought back for the individual trader is going to say buy 2 contracts of the 57 call for $4.60. Instead of putting up 11 grand, you're putting up just $920, and the minimum you would need to put up is just $460 because the minimum you could do was 1 contract. And if you look in between, in this example, we went out 37 days. It's fine, you can just leave it. So one of the biggest misconceptions about options, and I just want to make sure to say it, I'm sure most of you know it, but I like to reiterate it, is that options expire, right? That you have to hold them till expiration. You don't. So we put that trade on for 37 days. In this market, the S&P is moving 6% every day. So you don't need to hold stock for 37 days. In this trade, 15 days later, those options that were at $4.60, the stock Square went from 57 to 74. It went up 17 points. So the options went from 460 to 17. That's a 400% return. There's no reason to trade stocks. You could have gotten this trade for $460 and turned it into $1,700. Okay? So that's why we use options. And then the last part is how we find the trades. And I gave you that demonstration at the beginning. I showed you Roku, and I showed you Uber. Okay? And now I'm just going to show you some other, and these are trades we actually made in the service. So on that day, there was a day where the market was down 600 points. And so what we saw was Celgene was up 14. That actually had news, so it's not going to qualify to be a Phoenix trade because there was news on it, which was that it was getting bought by Bristol and Myers. But what we started doing was looking at the brother and sister stocks, and we identified Gilead. And one of the things that happens when there's M&A is you have what's called spillover, where people are going to take over, or there's possibilities when there's one M&A that there's going to be more. So we started looking at Guild at 65.91, and the next thing we want to make sure of is that if we're right, are we going to get paid, right? That's the biggest question. If we're right in Guild, will we get paid? And so what you look for there is just the movement of the stock. Like when go back one slide, if I traded Uber, I mean, I knew the way Uber moved. It had gone from 40 to 14. So I didn't know it would be at 21 the next day, but I knew there was the potential for a big move. Roku, we all know, if you watch the market at all, it's always good for a 5 or 10-point move. Guild, I wanted to make sure of, and I saw, okay, this had been in a 20-point range. So if I'm right, I'm going to get paid. And we put the Guild trade on, and it was good for, so when we put the Guild trade on, it was, instead of buying 300 shares of Guild for $65.93, which would have cost $20,000, what we did was we bought 3 contracts of Guild for $2.40. So instead of needing $20,000 to do the trade, we needed just $720. And the minimum you could have done the trade for was $240. So we bought the 66.50 call. Guild continued on its momentum course, and we closed this one for a 19% win. And then one of the other things I wanted to do when we started doing this was I really started asking for individuals like yourselves to give me feedback on every trade to make sure people are getting it. Because I realized for some people it's the first trade they're making, or like all you said, if you're doing okay in this environment, I wanted to make sure I wasn't just spinning my wheels, that when I put a trade out into the universe, real people were actually using it. And I have a wall of fame I could show you then at all real people that have written back responding to these trades. You could just go through them, and then there's just literally there might be 500 right now. Individuals that have written in about these trades in the last year, which I'm so proud of. And we keep track of every trade in a trade portfolio manager. And if you look at the bottom, we show the date we enter the trade, the action, buy or sell, whether it's a call or put, the underlying symbol, the quantity, the strike price, everything. And one of the things I like to do is keep it, if you see, $500 around or less. Sometimes we go more, but for the most part, I try to make it so every trade can be done for $500 or less so that everyone feels comfortable participating. And then what happens is as you get used to the trades and you grow, there's people that are doing 20 contracts, So we'll put on a $300 winner. That will be a, $6,000 winner for some people. It's just all about the size that you trade. I always realize that it's better to go with the smaller size so people feel comfortable. And now what I really want to hammer home, Linda, is what I went over at the beginning, which I don't know if you saw, which is, again, how we're going to make these trades, what I'm looking for in this market. And it's the same thing every time. This was Papa John's Pizza. Light blue is the Dow. Purple is the S&P 500. We see Papa John's breaking down below the market. So this is an example where we would buy a put. Now, we're never naked short selling. We're never shorting a stock or risking ownership. We're just going to buy a put because we saw a negative divergence. And the minimum you could have done this trade for was $160. We did 4 contracts at $1.60. We went out for 29 days. And in this case, we closed this in different parts. First part was we took 100% win when it went from $1.60 to $3.30 because that paid for the whole trade. And then we sold the rest at $5. So that's a trade we made in the Phoenix server. These are all trades we made in the service. And this was good for this. Show you a couple more real quick, and then I'll maybe go off screen because everyone seemed to like that. Activision, it's the same chart every time. We're looking for a breakout or a breakdown on no news. Activision breaks out, we give you the alert. Okay. AT&T, not normally known as an exciting stock, but we saw the breakout and we traded. And then what you usually find in examples like this was good for a 300% win. The news comes out later. And that's one of the things. These stocks start to bubble and move before the news. So whenever we see that divergence, which I keep showing you, I'm just trying to teach you this formula. This is what I find every day. Well, I don't find it every day. This is what I look for every day. And when I find it, I trade. Okay. And we got in those for $1.52. You can have that trade for $152. So now your eyes starting to pick it up. This is what I'm doing. I'm training you right now. You see on this one on take 2, it crosses over. You see where it crosses over. When it crosses over, this is where we trade. And take 2 is good for 37% win. Okay? I showed you, and it's so funny. I don't usually go off script, but when I showed you at the beginning the Roku trade, and I showed you how that went down while the market was going up, and how the next day went lower, and I showed you how Uber stopped going down, and then it was up 50% the next day. One of the other things that's really good is when we don't see that, when we don't find stocks that are doing that, we don't trade. So it allows us to be very selective. And since I brought the Phoenix letter back, it was always a good service, but it was a stock trading service. Now it's an option service. Since I brought it back in December of 2018, we've made money every single month. Okay? And I'm so proud of that. And in March, this month, the craziest month of all, we have all winning trades. Okay? This is what the equity curve looks like. And this is our profit but loss by year. We made money every month in 2019, but 2020 has already beat 2019 because the size of some of these moves are so significant. And one other thing I want to tell you while we're here, because the next question that people would say, I would hope you would say, is, well, what about the losers, right? Bruce just said it. You're showing all your winners, but what about your losers? Okay. Well, the nice thing is we keep track of every trade we made, Bruce. And this will sound, actually, it will probably sound too good to be true, but now that I've gone off script once, what I'll do for you, Bruce, is before this presentation is over, in the next couple minutes, I'll once again go off script. We'll log into my trade portfolio manager. We'll go into the Phoenix letter, and I'll show you every trade we made this year in the service, because we've had two losers this year. The biggest one was BlackBerry, which we bought on a speculative play for 22 cents, 4 contracts. So we lost $88. That was our biggest loser in the Phoenix letter. Okay. We only had 2 losers this year. There's a gentleman named Charles who was, actually, I'm sorry, it was Larry. I don't know if he's here today, but he was with us on another one. He joined in December. He said he's had 0 losers, but I identify as 2 very small ones. Okay. Stanley said time up and new with options. I'll let you, Stanley, but let me show you something else, and then I just want to show you a couple more. So remember I said I bring this all together at the beginning of the presentation. If anyone got here late, don't worry, I'll send you a recording. But at the beginning of the presentation, I showed you just the chart of Beyond Meat. Now, all I did was add in the Dow and the S&P, and now you see how we knew to get involved with that trade. And we traded it in the Phoenix letter this year. Do you see the way it breaks out? Now you just see that extra part of it, and it all makes sense, right? We didn't know that it was going to explode, but once it started to break out from the market, that's going to identify a trade opportunity for us, okay? And then these are just people writing in real results. I'll show you that later too. Wait, go back to that SPY. Yeah, go back to that SPY. Okay. So sometimes we also trade the market. In this example, this was February 21st. We bought the February 26th. We bought the 333 puts for 225. We sold that was on a Friday. We sold them on a Monday at 975. So obviously we can't see the market breaking away from the market like we recognize individual stocks. When we put on market trades, and so far they've all been good, it's literally when you feel like the market gets light. If it's down, we could do that. Or sometimes if the overall market gets heavy and there's nothing we want to buy and we just feel strongly the market's going to go down, we'll put on a put. So we put on a put here, and people were really happy with this. And what I just want to show you again, this is just to create real time, just to get you pumped that you can do this. Because look, this is one contract on February 21st, buy a put in the SPYs, 333, $2.25. $225, you get involved on a Friday. On Monday, you close it out for $9.75. And I just want to show you the response now, because we got so many emails to this trade. If you look at the top, these are just people that emailed in got out at 750, 65% win for sure. Just go through them fast because I'm going to go off script a little more on this one. 65% gain from Glenn. Can't wait for the next trade. Curtis. And the reason I'm showing you these, I don't want you to we go back to that one. I don't want to make you feel bad that you missed trades or anything like that. And I'm not just trying to like sell you or anything like that. I just think it's important to show you that real people are doing it and the proof of concept. And it's just, you see the emails coming in and it's just people feeling good. And so he did a little bit more. He did 2 contracts. Curtis did 2. So he made $785 on that trade. Okay, go to the next one. Patrick, 91%, whatever. They get the point. Okay. So this is the last trade we made in the Phoenix. This was this past week. Again, Starbucks stopped going down ahead of the market. This was on a day where the market was getting destroyed. But Starbucks just stopped going down. It's been beaten up. It's come from the 80s down to the 50s, but we got involved when Starbucks was trading at 55 because it stopped going down ahead of the market. The same pattern I've been showing you this whole time. And this is what an alert looks like. We send this via email and text. This is what you would get. We're going long Starbucks today. The potential reward at this level significantly outweighs the risk. Plus, Starbucks remains open for drive-through and fundamentally just makes sense in this market. I did like that Starbucks wasn't closing. It was open. So we bought the 55 calls for a net debit of around $5.30. So this one we put it on for $1,000 because it's extreme market conditions. We were really confident. You could have put it on for $500, and the next day we sold them for $9.55. Okay, and the last trade before that was Work. Again, the same thing. Work was not going down. This was down 7 cents. That was probably a day where the Dow was down 2,000 points, I think. So then what we did was we put the trade on in Work, and we got in for 2. And this is important. Keep the slide for a second. Work's been holding up well in this market. We're gonna go out a little time and look for this to come back. So we bought the April 17th 20 calls this year in Work for $2.40. So we had months to be right. So are we willing to hold this? Yeah. Like we were willing to take $2.40. Like think about this. Here's a stock that looks good. You could get involved for $240. No, that's the most you can lose. No matter what happens, the most you can lose is $240. Would you do that trade? I want to ask everybody right now. Let me ask everybody real quick. All right. How many of you, Linda, you're going to be happy, don't worry. Linda went from not liking my presentation to asking how much it costs. Let me ask you a question. How many of you, if I said to you, based on what I've been doing right now, okay, I just want to know, because if this is going to be very important. This is the most important question I'm going to ask you. If you got an alert like this, and I was like, this stock is not going down, this stock's not going down versus the market because I'm going long, and I just showed you my whole strategy is based on outliers, divergences, things that aren't happening the way they should. If you got this alert and knew you could put this trade on for a month and you would risk $240 to buy this option, even if you've never traded an option before, would you put this trade on? Give me a yes or no. I'll do it. Little risk, unlimited upside. That's 100% true, Stanley. There is limited risk and unlimited upside. Okay? You got it. The most you could lose. Now, Warren, you said too expensive. That's fine. Then that's going to answer a question for you later, because if it's too expensive, then you just can't trade it. If you can't do the 240, I respect it. I'm giving you an education. Unfortunately, it's the stock market and real estate are two of the greatest money makers of all time, but they both require you to have money to get involved, and your time doesn't correlate with your money. You're not going to sit there watching it all day. You put it on, that's your investment. Mike said maybe. I know a lot of people said yes. But what would be the maybe? Because at the end of the day, if you're not going to do this trade, and what I'm saying doesn't make sense to you, that's fine. We'll just pull the Band-Aid off right here. But if this does make sense, This is all it is. It's getting involved for this trade. This is what the alert, you put it on, and let's see what happened. I know what happened, but let's see what happened. Let's just talk about if it went the other way. Let's just talk about two different ways, okay? Yeah, Rod, you can. Let's just talk about this two different ways. Let me ask you this now. This is an interesting question because you know the result. It was good. It worked. But let me ask you a question. If you would have lost the $2.40 by April, if the market went down lower and you would have lost $240 or $480, would you have been upset? Or would you have looked back and said, you know what? It was worth the risk in this environment. I gave myself a month to be right for $240. Would you have been set? Yes or no? See, I had a lot of people say yes, they would do the trade. I only have 3 people saying no. I want a yes or no. Everyone who answered the yes, Steve, Brent, Bruce, Barry, John, Linda, everyone answered. I want to know. I want to know if you would have been, so just be honest, right? Right. So if you, and that, by the way, you guys, that's trading. That's trading. If you go into it and you have a plan beforehand and you say, listen, if you're buying the stock, if you buy work at $25 and you think, oh my God, this company could go out of business, then your floor is 0, and that could be kind of scary. But if you go into this and you say, wow, even if work goes to 0, the most I could lose is $240. I'm not going to lose sleep over that. I'll check it a couple times a day. I'll wait for Adam to send me my text, my email. And then, you know what? I'm not greedy in this market. Like a ninja. We were up over 50% the next day. We were in for 240, out for 390. If we did the 2 contracts that I said, you made $380 on that trade. If you've been with me for a year and you've gotten to the point where you're making 10 contracts, well, then you would have been made, what is it, 243. Now you would have made $1,500 on that trade. Whatever you risked. If you risked 2,400, you would have made 3,900. If you risked 240, you would have made 390. Either way, the math is still the same. It's still a 50% winner, or over 50%. I think it was like a 60% winner. That's what this service is. Go to the next slide. So now we get to the point where you can sign up if you want to, and it's all going to be just trades that make sense if you feel comfortable, and I'm going to do it at a price that makes sense because I realize that even though my service is great and it's at its highs for the year, it's 1 to 2 trades per week, so you can do it without watching 24 hours. I do realize that people have taken financial hits in other places. So just to show you what you're going to get, first of all, you get calls or puts to take advantage, never owning stock, never going naked. You get emails and text alerts to trade. We explain the why behind every trade. We're going to put on training events. I'm going to bring on guests all the time. And one of the things I do is I show up in this market. So we put on extra calls, live trading events, demonstrations, everything we can to help you take advantage of these opportunities. And then if you ever need help, we have a full-time customer support team. I mean, it's Saturday, 10 in the morning. If you want to talk about prepared, my screen stopped working 5 minutes into this presentation, and I have 2 other guys on here that are backing me up. So I think that's the best example, actually, of how I prepare for things. The other day, one of our top traders who does a live trading room, his computer broke. He went out, drove an hour and a half because no stores were open to borrow a computer from his sister because that's the only person he would go near in the Corona season. But we had 2 other guys with their computers backed up, ready to go. So we triple check everything in terms of that. And then in terms of the price, here's what I did. I know Linda was asking already, and Juan was saying sign up. So it would be $29.95 for the year normally for corporate rate. But I realize the times we're in. I realize some people might not be getting paid right now. So what I'm doing is I'm making available. It's $397 for 6 months, which I think is a great rate. I think, Linda, I hope you would agree too. As you've seen, there's many of these trades have made that. But I want to be able to help people make money and still have a great team that helps to show up and support you. So it's $397 for 6 months. If you're wondering what happens after the 6 months, your price does not go up. I never raise prices on people. Once you get this price, it's yours to keep. I'm never going to change it. So it works out to $66 a month. If you're not happy at any point, you could get a prorated refund. So if you left, what month is this? It's March. Or if you left in April, you would get $331 back. Okay. If you left the next month, you get 290 something back. But all the trade thirsty people that have come in, they stay. Everyone stays. I mean, unless someone literally just cannot trade, then based on the trades and the success we've been doing, people have been very happy. So this is what I hope you consider to be a really popular and customer friendly deal in this environment. It also comes with some other stuff. It's usually for the first 100. I'm not gonna game that. Anyone who on here, you're showing up on a Saturday, I'm gonna honor it for anyone. You're not gonna get locked out. So, but you go now to adammesh.com/thirsty, because I don't have this up anywhere else. Go to adammesh.com/thirsty. You'll get the Phoenix letter. You'll get on Tuesdays, me and Christian, that technician I talked about when the market was going up, who said the lows still aren't in. We do an insider call at 1 p.m. every Tuesday. You could come on and we break down the market, and then we do what's called the lightning round, where we just flip through all these different stocks. So someone who's asking me, how do you screen for stocks, Barry? So every Tuesday on this lightning round, we're just rolling through stocks. That's how we found Zoom. That's how we find Work. That's how we find Beyond Meat, Shopify. On a Tuesday call, all the members come on. They just chat in stocks, and we just go through different charts, and that's where we're working on our list. And if you can't make it live, those are recorded. So it's $397. Plus, you get the Options Academy on Monday. Whenever you need extra help, you just go into the Academy and you ask your questions. And then we also do a whole thing on marijuana where we cover that. It's $147 for the year. You get that free too. It's all at adammesh.com/thirsty. But I've been having fun with you. So now just to answer some questions. Okay. And okay. All right. So how many trades will be done per month using your system? I'm just going to bring up the track record, and I'll show you everything in a second, okay? When you sign up, do you have a ton of other offers? Mike, I only want you to get other stuff from me if you make money with this, okay? You could ask. There's people who I said, don't sign up for this yet. Just make money with this. We have live trading rooms where people could trade all day. Those are much more expensive. They're for much more active traders. If you never want to receive any other offer from me, I don't care. This is the way I prove myself to you with this service, by giving you simple, easy to use, winning trades, and just make it a positive experience from there. Keep it very real. You make buying options not sound like a 20% win proposition. I'll show you every trade I made. Well, we're going to go into it in a second. I just want to leave the screen up because people are trying to order. But we're at like a 75% win rate. I just totaled everything up with my daughter, Steve. Okay. So yeah, this is the link to sign up. And then let's do two things right now real quick, because you guys have been a great crowd. You want to just keep going, I'll do some more stuff and keep asking questions for you. Does everyone understand what I went through? And by the way, there's a number on the screen. My team is also standing by. If you have questions over the phone, you call 212-774-5983. Does everyone understand what I went through and how I find my stocks and the simple thing that I'm looking for to put these trades on? I just want to make sure. Do you all understand what I'm doing here? Give me a yes. All right. Stanley. So Stanley's a perfect example. So Stanley, listen. Stanley said, I'm interested. However, I have no experience in trading options. This is tailor-made for someone like you, because you could come on, you could follow along with the alerts and motivate you to open an account. You could come on the Academy on Mondays, and you could see. And really, I just boiled it down to it's as simple as in that Papa John's pizza trade, it was $140 minimum to get involved, and it would have been worth it then $5. So 140 would have turned into 500. So if you're on here and you want to learn, this is the simplest way to learn. And the 397 for 6 months is literally a gift. Okay. Alex, yes, 100%. Respect that. Do me a favor, Alex, just chat in your phone number and I can have someone call you tonight after 5 p.m., okay? Or after 6 p.m. Alex, you just chat in your phone number. We can call you after 6 p.m. So Brent said there's no trades we have on right now. So there's no trades that we have on. You'll get a new trade this week. David, no, it's definitely not similar to Next Big Profit. It's more active because you're getting trades 1 to 2 times per week. And it comes with the Mesh Insider, so you're getting that for free with this, okay? So you're getting a ton of value here. But what did Linda say? Linda said, I do not know how you find the stocks. So all I'm looking for every single day is every day that the market's open, although I'll probably look today while we're here. All I'm looking for is divergences. Strong stocks on weekdays, weak stocks on strong days. I'm going to do a couple more things. So you see how he has, go to the Starbucks one too. Thanks for doing that. Okay. So I'm watching all these stocks anyhow, and that is the way I'm doing it anyhow. Wait. Okay. Wait. Sorry. One second. JJ, just talk about the divergence here in Starbucks for 1 second as people are signing up. 1 second.
No problem. Okay, so just real quick, everybody, if you're looking at the lines, what you have here is the Dow and the the S&P, and they are diverging from where the actual Starbucks move is. So you can see that even though both are up, Starbucks is up a whole heck of a lot more. So it's a stock that's outperforming in an up market, right? Good stock, good market, and especially when these are going back down, the stock is staying up. And then I believe that's momentum divergence, meaning that the stock is being traded at increased volume, right? So there's more of it going on, which makes our trading a little bit easier. That volatility kind of helps us out, right? It's that momentum, that push, that what do you call it? Gas on a fire, essentially, right? So that's really where it happens right there. If you want, you can move it to the next slide and I can kind of show the same exact thing. Oh, no, this is the actual trade. No, that's actually fine if you want to go back and explain the trade. So what we did there was we saw the momentum diverging, right? We saw that Starbucks had that momentum going up. So we played along with that, right? So we said buy to, so it's at 56.27 right now. The action was to buy to open 2 of the 417, the April 17th, 55 calls. So we're buying something that's already in the money and taking the momentum going up. So we'll have both the upward move and the trajectory of being already in the money that will drive the price of our contract higher and higher, faster and faster, as opposed to an out of the money call. He says to buy it around 5:30, and let's see what happens on the next slide. And to explain the trade, so yesterday we bought it and today we're going to close it out. So one day before, right, 24 hours prior, essentially, you're buying something for a total of, I think it was, how much was it? $5, right? Can you go back for 1 sec?
Yeah, it was $5.30.
$5. There you go. Okay, sorry. And then the next day, Adam, take it over.
And so what I'm going to do now, because I just want to show, which do you guys want to see first? Thanks, Romain, for signing up. So William, we have spreads and other services. This is just simple calls and puts to help people get over the fence. If you have questions about anything else, you could call the number on the screen, but this is just calls and puts. And there's 1 to 2 trades per week. Linda, let me know if that helped for you. I think you would really like it, you've asked good questions, you're participating. I think if you've got good results, you'd be happy. And then if you want further questions, how we do the trades, we're very proactive about answering everything. So let me go. Do you guys what would you rather see first? Do you want to see the track record in detail, or you want to see user experience? Just write user experience or track record. I'll show you whichever you want to see. Track record? All right, cool. Will you bring up the track record? Are you able to do that?
I think he just needs to flip it to me for 1 second. He can do it. Just hold on 1 second.
Sure. Yeah. Okay. By the way, how many webinars have you guys been on where someone's like, yeah, sure, let's just go out of the webinar and go in and look at every trade we've ever made that we kept track of? Some or none? All right, we're just switching screens real quick, okay? One sec. We're moving. If you just arrived right now, we are switching screens to go live inside the track record. Just take my word for it. If you go to you don't have to take my word for it. You can just go to the testimonial page. If you go to the testimonial page, you'll see literally hundreds of people that wrote in detailing their individual results, which is cool. So go to the trades. Okay. So if you go back, if you move the mouse down, so now remember, some of these are just one contract. So anything you do, if you want to go bigger, if you multiply it by 10, a 90 becomes a 900. I keep it very small so that people feel comfortable. And if you look, going back to January, and you scroll up, like I said, we had 2 losing trades. The biggest one is what I said is BlackBerry, $88. And then winning trades, over here, $750. Here's $300. Here's $850. But please remember that's on 2 contracts. A lot of people in this industry do things based on 10, 20, 50, 100 contracts, just so these numbers would be bigger. If I did this trade on 50 contracts, this would be $25,000. If I did this on 50, it would be $7,000. I do the little contract size because all these trades could have been made with, like, this one could have been made under $200. Like, just to give you an idea, and this is how much kid gloves it is, it's as big or as small as you want it to be. And then if you go, JJ, can you go and you click on all the stats so they could see how many winners and how many losers too? Um, 44 winning trades, 16 losing trades, and that's the win rate versus the loss rate. And let me ask you a question. Do you like that I keep everything smaller in terms of numbers? Because this is like, if you showed up with $1,000 week 1, this is what you could have done. So it's very real. Or would you rather see bigger numbers? Sometimes I wish I could roll out and be like, look, we made 50 grand, but I don't know. I just try to keep it realistic for people. What is the recommendation to stay not on top of the information, on top of literally, you just register, you get an email and a text to make the trades, and you get invited onto the calls. And we don't stop out of positions because our risk is so low. Rod likes keeping real small numbers. Thanks. We don't stop out of positions because the risk is defined anyhow. We know we're only risking $2.40 for the next month. So at the end of the day, like, so what? The market just came down 30%, right? So if that option goes to 5 cents, we're not going to sell it, or even 50 cents. We're not going to sell it if we have 3 weeks left and we could get a 6% move in a day, right? And the nice thing is if you're trying to avoid day trading, David, this would be perfect for you. It doesn't expire. What I would just say is if you want to lock in the rate, because it's not available anywhere else. Like, you can't buy this stuff online or anything. What I would say is, David, you could just call the 212-774-5983 number. You could put down like a $50 deposit, and then whenever you're ready to get started, call back and you lock it in. Brent said he likes small numbers, easy to see. Okay. So yeah, adammesh.com/thirsty. And then, I mean, as we're bouncing around on this thing and it's fun, I kind of like, Jeanette, I kind of like this Saturday morning thing. It's relaxing.
Well,
Jeanette,
I'm so
yeah,
glad you don't have to stare at the market, do you? You can just talk
you
about
know
it.
what? I'm more focused. I'm more relaxed. And it's just a calmer thing. Like, it's different when you haven't been trading all day to come on in here and do this. It is.
Well, I'm glad that I talked you into it, even though you told me no. That's the way we roll, though, right? You tell me no, I say, but come on, Adam. You say okay.
Right. No, yeah, I've enjoyed this. I like smaller, market is closed, you need the break, laugh out loud. Yeah, exactly, Stanley. JJ, just take them to the testimonial page, just because I'm so proud of this. I'm just trying to show you guys. This is just to inspire you. These are all people that wrote in that see. So Linda signed up. I'm so excited. Linda, people like you and I end up having the best relationships because it's someone who challenges me at the beginning, questions the presentation, asks a lot of questions. And I think what happens is you come in and you see that I maintain this level of care and responsiveness, and we do everything we say. So skeptical people with an engineer mindset, they usually like me a whole lot. So I'm glad you came in too. I'm glad I won you over. Those are always the most rewarding. Gordon,
Adam,
when
I'm
do you
down by
usually
all
play?
the Starbucks testimonials.
Ah, perfect. Gordon said, when do you usually just place trades? No, not just before the market closes, because we're not going to. We're sending this out via alert. So everything I try to do is, I actually have a person whose job is head of customer experience, Gordon, and one of the feedback we got is if we send an alert at 3:45, a lot of people just won't see it in time via email or text, or if they're doing something, and then they get frustrated. So we try to do everything, you know, so that it's convenient. Sometimes we might say, if you can get this now, take it. If not, we'll revisit tomorrow. And then, like on that SPY trade where we were up 400%, there was the SPYs were down 10 points. We own puts. I send an alert pre-market saying, be prepared. I send it at like 8 in the morning. Right after the market opens, we're going to look to close this trade. So we try to kind of give you a heads up on that too. Okay. So if you look, these are all just real people. I take out the full last name, but a beauty, sold for $10. Nailed it. I joined the service and I'm thrilled with this trade. Closed this at 975. I got 920. In at 550 out of 955. Nailed it. Yeah, I'm happy with that. Inspired trade. Got out at 9. Another excellent trade. You finally get this. You guys rocked. 100%. Nailed it. And that's just this one trade. And if JJ scrolls up, you're going to see. I said it. We could be at 500 people right now that wrote in. And we have a whole team to support you. So go to adammesh.com/thirsty or call up. I believe, James, because these are just calls and just puts, and there is no undefined risk, that you can do it in your IRA. Obviously, if for some reason you can't, just let me know, and I'll certainly give you a refund. Okay. But people, stay with me. If you like trading, you're gonna like this. All right, so you see he's scrolling up. It's going to take too long to scroll up. These are just please remember, I'm just so proud of this. These are all real people on a wall of fame, just doing it. And I hope everyone on here if you like me on a Saturday, you're going to love me during market hours when you're getting trades. So if you feel comfortable and you want to move forward and what I said makes sense, please join me, adammesh.com/thirsty. If you don't feel comfortable and there's something I could do to answer your questions, I mean, heck, it's not only is it Saturday, but I'm not allowed to really go outside. So I got all the time in the world for you, and that's why everyone else is here. This is the thing to do right now. The nice thing is our business has always done webinars and created a virtual experience, so we're prepared for stuff like this. So with everything going on, this is kind of a great place to be. You could pop open the screen fully now to the Thirsty. Yeah. Any other questions, or you guys all good? Guys always affectionate for men and women. Did you enjoy this? Because I'm telling you, I'll stay. No, of course, Stanley. I'm happy to. I'm happy to share. I just want to make sure you all understand it. I think if it makes sense to you, you understand the risk reward, then it's good. Mike, what platform I use? Tastyworks. How do you look at options that have little activity or volume in the options? I don't trade them, especially for community service, because you can't have a lot of people being stuck in trades. We got to keep them liquid, Steve said, can you do one more divergence trade? How long is the 6-month deal last? So 6 months, and then your price never goes up, William. It would renew for $397. So your price would never go up. Okay. Steve, you want another divergence trade? You guys want to see another divergence trade? I just got to think of a trade that I did this week, and then it will make sense. Do you want me to show you, like, in Yahoo Finance, how that goes versus the market? I'll show you the number one divergence trade of the month, but you should know it right now. Rod said, another service is telling me to stay out of the market because it's too volatile. If you're doing defined risk trades, I think it's the best time to be trading for what we do. And I think my results have shown that too. So everything will be defined risk. Listen, I've already said my CMT thinks we're going to go lower and retest the lows, but we're just patient. We sit out, we ride the waves, and it's fun. And the nice thing is you're not doing it alone. You're doing it with me and my team. How do you know when to close out your trade? I don't. I was telling someone the other day, like, the market's forever in motion, Alan. Sometimes it will be that you should have sold earlier. Sometimes it would be that you should have held. So what I look for is when the momentum makes sense. So like in that Roku example, right, that I showed here, I'll bring up the Roku and then I'll show another one. So JJ, if you can bring up Yahoo Finance, please. Brent said, how do we learn how to do this so we can also find our own trades? So yeah, once you're inspired and you're getting these trades, you're going to be on the insider call with me at 1 p.m. on Tuesdays. And that's where you get extra questions and we go through the charts, and Christian's constantly teaching. And then you have the Options Academy on Monday. And then we're putting on training events every month. So we're constantly teaching. And this is just kind of like you really just get used to the speed of the pitch and seeing what we do. So this is the market. So if you go to the SPYs, click on the SPYs, right? So I'm just going over this Roku, and then I'll do another one. I'll take another one. Let me show this to you. This is for anyone who got here late. Okay, this is one more just example again. So I post the trades on the site after we make them, but we send them out via email and text first. So we send them to you, and then we post them on the site. Okay. What did I say that just made all these other people start buying this right now? Did I say something? What did I connect with just now? I want to know what I did so I could do it again. What did I just say right now that everyone's coming in? JJ, what did I say? I guess it's just being real, right? So here, look again, March 26th. You see, if you look in the left, 249 it opened. It closed 246 the day before. It was up to 261, right? So that's March 26th. Remember that day, March 26th, the SPYs were up 15 points, And then March 27th, they were down 8, which is around half. Now go to Roku. Okay. Okay. So Roku on March 26th, when the market was up, it went from 94.85 the day before, because if you look right below it, that's the previous close. It was down over $5. Okay. And there was no news. So Roku's down $5 with the markets across the board flying. That's where I would buy a put. And if you look the next day, it went to a low of $83. Okay. But Roku, that's a good example. The premium on Roku was too much for me to get the members involved. So I do factor that in, where if I want to buy like the 95 put in Roku to go out a month would have been like $15. That would have been just a little too expensive with the swings we're seeing. So there's a lot of factors that go into the trades I make with you guys, and guys always affection for men and women. So in this example, this was a great trade. I thought about it, but I didn't want to put that much risk into the market. Whereas the Starbucks trade, $5 risk, I was much more comfortable with a $5 trade than a $10 trade. And then if you want to see like a stock setting up, like a future parabolic stock, JJ, bring up Zoom, ZM. And like Zoom is a stock that, again, this one you can't really trade options on because they're kind of spread out and gapped and really pricey. But it's one that we talk about on the insider call all the time. We've been talking about Zoom for a while now. And if you show a chart, just bring up a chart of Zoom. So click on chart. And let's just go to a 3-month chart of Zoom. And now click on comparison, right next to indicators right there, yeah. Click on Dow. And then click on S&P 500. That's what we trade. That's an outlier, right? But the outlier, it actually started to outperform in February, right? See, it was underperforming the market. See where it crosses over, and that's the stay-at-home play, and that's the pattern that we're talking about. You want to look at something in reverse? Have some fun. JJ's you're getting all fancy with the highlighter now. I like it. You want to see something in reverse? You want to see something ugly? Let's look at Penn Gaming, PENN. And then, yeah, just do like a 3-month chart. You can even do like a 1-month chart on Penn Gaming. Okay. So now add in the Dow and the Nasdaq. So Penn.
I apologize, I am, but they're not here.
Oh, that's weird. Just hit refresh. There you go. So there you go. So originally, back in January, they did the deal with Barstool, and you see how it outperformed. That was because everyone loves Barstool. But then you look where it crossed over, and I mean, this is a very risky stock to trade. But I actually bought puts on this on Friday too, because this is really underperforming the market. Right there. I'm going to show you another good one as we're just going through chart work right now. There's what's another stock that has it? You want to see a really good stock in this market? I did this in a live trading room. I put this trade on. Options were $1.50, and they went to like $14. Look how well JJ knows me. Walmart. You put in WET. Oh, there you go. So you go to the chart. You want to see the chart on Walmart? Look at this. This is crazy. we got involved when Walmart was trading at 112. It went to 128. So look at Walmart. Go to a 1-month chart, right? And then you could actually just keep the Dow and the Nasdaq and just switch symbols now, and just go to the upper right. Just go to the right. Yeah. Just put in. I'll show you another one. BBY. Best Buy has actually also been outperforming the market. Has it not? Go on 5 days. No, it has. Yeah, there it is. I know the last couple of days it was. So when you guys are asking me how do I find stocks, I mean this is all I do all day, every day is I'm watching them. I put in the work. So no, I put in the work. Not the symbol. But yeah, work is outperformed. That's a stay-at-home stock. Peloton, if you want to do more like that, Peloton, PTOM. Peloton's been a good one. That's not right. Click on 3 months. 3 months. Yeah, there you go. Peloton. TDOC has been amazing, but that's another one that doesn't have options on it. TDOC. Look at that. All right. Does that make sense? No extra charge, Scott. No extra charge for Options Academy. It's free with it. All right. You can go back to the final page. We'll leave the number up. Most all you guys still here, which I appreciate. And I had a lot of fun with this. This was chill on a Saturday morning. So thank you for coming out. I'm glad Jeanette pushed me to do this. It's adammesh.com/thirsty. You could call the number if you have any questions. And I hope you enjoyed it. And if you want to trade some options in this market, we'll have a lot of fun together. And you understand the risk, you understand the reward, so you could feel comfortable moving forward. So thanks for spending your Saturday morning with me, occupying all of our time. Thank you so much to Jeanette for putting this on. And talk to you guys later. Good, everyone.
Well, thank you, Adam. And if you'll just leave that up so they have the link, we'll leave it up for a few minutes and then we'll shut this thing down. I want to thank everybody out in the Trade Thirsty world who took the time to come out and join Adam this morning. Adam, I thought it was a great presentation and going off grid a little bit for us and taking us through the back end and also how to use Yahoo Finance to find the right pricing for these different options that you're trading. It was really eye-opening for me, especially because options have always been a big mystery to me. Could trade the S&P all day, but don't know anything about options. So maybe I need to join this service. Anyway, thanks. And his link is adammesh.com/thirsty. Y'all have a great weekend and be safe out there in this brave new world that we're in.
I said Brent. Brent asked if that's how I analyze stocks on Tuesday. I actually have the CMT get into like a little bit more sophisticated charting patterns. I do my thing like we just did, but then he does that for the market as a whole, the breakdown. He looks for divergences and patterns and stuff like that. So we do those breakdowns every Tuesday. Okay. Sorry. Thanks for that.
All right. Love you. Talk to you later.
Bye.